So after you've put together your trial balance, you might be wondering what you do next, and you might think, oh, I can just go ahead and put together financial statements. But there's one thing you want to make sure that you do before you would go ahead and put together the financial statements, and that's to make any adjusting journal entries that are going to be necessary. Now you might be wondering, why do we need to adjust accounts? What's wrong with the accounts that are in the trial balance? Aren't those accounts accurate? Well, yes, but there's something, in some cases, they might not be updated properly, right? And you might be wondering, okay, well, why would it not be updated? What exactly is going on? Well, some transactions not recorded on a daily basis. Okay, so we think of something like, let's say you have office supplies at the office, and someone goes and takes a pencil or they take some paper from the office. They're not necessarily going to go run over to an accountant and say, let's make an entry right now to account for the supplies that I just took. So it's a little unrealistic in some cases to make constant journal entries. So some things you just kind of wait till a certain period's up, and then you go ahead and you just update them at the end of the quarter or the end of the month. So in some cases, an item might just be unrecorded. Maybe you've incurred some kind of expense, but you haven't actually received a bill in the mail yet, or something like that. And so in that case, you might say that you need to make an adjustment. So let's look at an example of an adjusted journal entry that would be quite common. So let's take the example of the supplies account. So let's say that you look and you got your trial balance, and you see that on December 31st, 2015, your trial balance TB shows that you have $200 of supplies. Okay, now remember, supplies are an asset, so you have $200 of supplies, but you might be thinking, well, hey, during the last quarter, the last month, what have you, we weren't actually going and making entries every single day when somebody went and used the supplies, as we talked about. So now what you need to do is you basically need to go and count. You need to go and look at the supplies and say, okay, well, what's the value there? How many supplies do we have left? Did we use 50% of our supplies? What did we use, and what's remaining? So let's say that you go and you do this count, and you say that, okay, well, it looks like we have $50 of supplies remaining. Okay, so this we can think of this as our beginning balance, right? Is the 200, right? That's the beginning balance, and then we can think of the $50 as the ending balance, right? Now we just have to figure out what happened in the middle and go ahead and make an adjusting entry to go ahead and record what took place, right? So let's say that, let's see here, just scroll down a little bit. So now we just go ahead and we say, okay, well, look, we had a beginning balance of 200, okay? Then something happened, and we ended up with an ending balance of 50. So what happened? What is this X here? Okay, so 200 minus X, if we set this up as an algebra problem, equals 50. We solve and we see that X is 150, right? So basically, we had supplies expense, right? We used up supplies in the amount of $150. So we can say, okay, we started with $200 of supplies. We used up 150 of them, and then that leaves us with 50. Now, does that make sense? Yeah, sure, that makes sense. Now let's go ahead and let's make the adjusting journal entry, because our supplies account is still reflecting on the trial balance this $200 beginning balance. So now we've got to update that. So we go ahead and we just say, okay, well, supplies expense. Remember, an expense, we've used up an asset. That's why it's an expense. Okay, so that's 150. Now, what are we going to credit, right? Because we need to make this balance. So we credit supplies, right? Because if we don't credit the supplies, then that means that the supplies are still in our financial records as saying that we have $200 of supplies, and we know now that we have 50, right? So what we have to do is say, okay, we've got an expense here and that we've used up an asset, and we need to reduce that asset also in our financial records. And so we make this following adjusting journal entry, right? We've made an adjustment to our financial records. So now we start with this trial balance that said 200. Now ultimately what we're going to do is we're going to create a new trial balance, an adjusted trial balance based on these type of entries, these adjusting journal entries. And now on the adjusted trial balance, supplies are going to be listed at 50, which is where they should be.